An important aspect that an insurance broker plays. Perfect. So these are the contents. There's quite a lot of subject material to go through. I'll move through swiftly, and always interested to hear the questions at the end. So the very first question is why are you in business? And my humour's shining through there. Really, we're all in business to make a dollar. At some time in the past, we've determined that we want to leave the business and we want to exit it with a maximum value to the business. But sometimes that's not actually what happens. Inherently in any business there is risk. Business is risky, life is risky, but it's meant to be. Risk, for some people is opportunity, and so therefore as an insurance broker, it's a question of marrying that opportunity with the risk. Understanding your risk is one of the key things that I've come to find with businesses, that businesses are very good at what they do, but they don't necessarily see some of the things within their business that I would see on a daily basis. So what are the biggest risks in your business? And I've actually just penned something on my sheet here, which is one of the key risks at the moment, and that's health and safety. So if you are a purchaser of a business or you're selling a business, you can't clock off. Those people are in your care, and if they are injured or die as a result of that, then you may well find yourself answering a pretty hefty set of allegations. Within the business, generally we find that the key asset is you, your people, and the tangible assets within the business. All of them are inherently insurable to various degrees. But then going into a business, and what good brokers do is they dig further into your business. Anybody can arrange insurance, but not many not many brokers understand the risk and your management of the risk. So there's inherently contracts within your business which can have a major effect. Your relationships with customers, suppliers, they can be insured to some extent in some circumstances. And then you've got the things that you can't control, like competition, fluctuating exchange rates, government intervention. And then really, coming on to the topics at hand, is your broker talking to you about succession, within your team, making sure that you can attract and keep those best staff? Is he talking to you about the ramifications of joint ventures and mergers? As part of a sale and purchase, there's many insurance obligations, which I'll come to later. So the management of risk. I've found that this quote really epitomises for me what risk management is. Donald Rumsfeld. There are known knowns. There are things we know. We also know there are known unknowns. That is to say, we know that there are some things we don't know, but there are also unknown unknowns. Now, the unknown unknowns are generally what catch people out. And as an insurance broker, what we try to do is provide as much experience of what we know to ensure that those are kept to a minimum. What I found is that you can't control everything. But what I've also found is that purely concentrating on preventing risk doesn't actually provide the results you're after. And what I've found is the most robust businesses focus on the continuity. So things will happen in your business. Some of them are insurable, some of them aren't, but it's how you handle them and how your staff handle them. So being involved in a couple of large earthquake claims, what has inspired me is that insurance played its part, but the staff have rallied round the principal, who they didn't necessarily have to, but they've got that business back up and running, and it still sort of sends a bit of a chill up my spine. That engagement with your staff is so crucial. And really that's what brings that resilience to your building and to your business, and that's something that you can tell as part of your story when you are selling. As I said, you can't eliminate all risk, but you can transfer risk. Now, risk transfer is something that larger businesses do all day and every day. The likes of Fonterra and the large telecom companies, they would be having large self-insurance aspects to their insurance program. They would not necessarily look to under-insure, but they would look to selectively insure, principally because they've had a lot of time to compile or draft risk registers and go through minute details with a number of professionals to determine what their risks are. For standard SME clients, really it's a question of determining what full insurance looks like and what that cost might be. I've never had a client complain about the cost of insurance at claim time, and what I have seen is a number of clients who have been unwittingly underinsured, particularly around the business interruption, and that's caused them some major cash flow headaches when they've had, in some cases, a minor insurable event. So what other opportunities are there to transfer risk? Well, policy excess and deductible. So you depending on the maturity of the business and the cash within the business, you can carry higher deductibles, and in some cases that can present a more affordable premium. But of course you can transfer risk to suppliers and customers by way of contract, and certainly getting them to carry either the risk of stock or other aspects. There are other financial institutions who you can transfer that risk to, but obviously the key one for ourselves is insurance companies. So New Zealand is an interesting insurance market. There are no NZ insurance companies. We are totally dominated by Australian insurance companies and American insurance companies, and as the market has tightened, we have Lloyd's of London, which is obviously in the UK. So insurance of risk. You can't insure something you don't understand. So as a business owner and your advisors, they must understand your risk. What that actually requires is a robust conversation with your advisors. They need to know everything about your business in order to understand it. You're not going to score any points. There's not going to be any winner by withholding important information. Bad results, a change in circumstances is something that you need to share with your insurance advisor to make sure that they're informed about the implications that may have to you. So that transparency and disclosure of all past, current and future material facts is pretty key. Material fact is insurance jargon. It's basically information that your insurance company may choose to rely on to accept your risk or to get the premium for your risk. And insurance companies are very good at determining what a material risk is to them after the event. So if in doubt, disclose. Seeking expert advice. Again, how do you know that your broker is an expert? What has he demonstrated to you? How does he understand and relate to you in terms of your business risk? I had a classic today, as you do. You're looking on social media, and there's a prospective business I've been looking at who I know is a building contractor, and he's hauling out a boat from the port and saying what a good guy he is for doing it. Now I can guarantee that if that's the first one he's done, it's unlikely that he's mentioned it to his insurance broker, and the first time is usually the only time that the boat falls off the hauler and he won't have a claim paid. So it's that sort of future thinking which is quite key. Now coming to the sale and purchase of the business, the future insurability of that business is absolutely something that both parties to that contract need to understand. I'll talk a little bit about the property market in Wellington in a moment, but how easy is it for your future purchaser to arrange insurance? And I can tell you that today it's a lot harder than it was 18 months ago. Have you done your due diligence? Some other parties have spoken about getting the right information and doing that work as though you are the purchaser, because ultimately you want to present yourself in the best light, and that future insurability or inability to insure is going to be quite crucial. Don't wait for the issues to arise from the prospective purchaser. Understand your sale and purchase risk. What are your contractual obligations? Which ones of those obligations can you insure? For very large transactions, there is insurance available for the warranties and indemnities that you may be subject to. What due diligence and negotiation have you done? At common law, you have a duty to always act in good faith, and so potential issues may arise, from real or potentially alleged non-disclosure. These can be innocent or unintentional, but obviously sometimes they can be malicious. And where are you sourcing that information from, and what may be the bias or the opportunity of your advisors to perhaps not get that right? Can these risks be managed, limited, or transferred? One of the other key things around insurance, in so much as when you're looking to sell or to purchase, is be talking to your broker, because there are some pretty crucial implications around some of your liability covers, around retroactive dates, around business descriptions, and actually digging even more detailed in terms of the directors and officers liability. There are terms and conditions which actually prevent cover from the sale of your business. So it's very crucial that you speak to your broker about that. So the insurance broker's role is principally to provide you and assist with that due diligence and the risk and insurance review for both sellers and purchasers. So I've done one, for either of those parties. Now, certainly in one instance for a purchaser, the inconsistency of the information between what were they being presented in terms of the sale and purchase and the insurance documentation was enough for them to dig deeper and to actually find that some of the things that were being told to them weren't quite true. So that's pretty crucial. This warranties and indemnities insurance isn't something that is readily available, but it's certainly something on the larger transactions that you should absolutely look to explore. Discuss the merits of continuing with full insurance. So what I've often had is conversations with people saying, look, we're looking to sell in 12 months, and in order to prepare that business for sale, they often look to drop costs, and insurance is one of those costs that no one likes to pay. It's an intangible thing, so they often look to reduce their insurance. Well, what my argument is that until you've sold that business, it's an ongoing concern, and there's no reason why a claim won't occur on any one of those days leading up to the sale, which could then leave your business high and dry. Now also, if you choose to under-insure or selectively insure, when the purchaser comes to do their due diligence, they will ask the questions why, and the future insurability of taking on a business that doesn't have full business interruption cover, has insured a building for an indemnity value, is going to affect those negotiations that you have. We need to talk to the current insurers. Some of those current insurers will have a problem with a sale and purchase. For example, when you're looking to sell a building and the building may be vacant, some insurers simply don't like to do that. And particularly around liability covers. So if you're in a professional business, you need to make sure that you maintain run-off cover. Now, there'll be professional guidelines around that, but if you give the insurer a heads up and explain to them what's happening rather than after the event, then that whole disclosure goes much more smoothly. Drafting an insurance memorandum of information is certainly something your broker should be doing for you. That should include the policy schedules, so what you're currently insuring. It may well include proposal forms, because that's the disclosure that you've provided to your insurance companies, your current insurance companies. Very important if you're looking to transfer the covers. But then also claims details. So when you're coming to buy a business and trying to get a gauge on the staff engagement, just look at the motor vehicle schedule, because what you'll see there is just how well those employees treat their assets. And there's companies where there's 2 or 3 pages of dings and fender benders, and these people don't care about the company they're working for, because they don't respect the vehicles that they're driving. So securing insurance for the purchaser is something that we can do. It's becoming more difficult. We currently have, I mean, I'm just skipping a page here, but we currently have an embargo on property insurance in Wellington, which is causing people some major concerns, particularly if they haven't given us advance warning. So what that actually means is the insurers, as they come off risk, as you sell your business, they are under no obligation and they have no competitive sales desire to take on that new building for the new owner. So the new owner absolutely has to get that insurance sorted. They can no longer rely on the previous insurer. So that is an absolutely critical thing, particularly if you've got a slightly older building, or if the building is has a low NBS rating. So the insurance market at the moment, it's all a bit of a muchness other than property, which I'll drill into in a little bit more detail. Liability insurance is very crucial at any sale and purchase, getting the right insurance. There are about 10 or 12 liability insurers in New Zealand, but probably 3 or 4 of them have only come up in the last wee while. When you're buying a liability insurance policy, you want to make damn sure that that insurance company is going to be around to pay the claim. And we have seen insurers depart, and any insurer that's only been operating in New Zealand for a short period of time has more of a health warning than someone who's been here for 150 years. Liability is very static. It's often claims driven, so if you have claims, your liability premium will go up. If you've had liability claims, it's debatable as to whether you need to disclose those to any potential purchaser, but I would deem those as material because they may be inherent within your business, that you have a lot of liability claims, and that's just the way it is. Motor, so the insurers really raced each other to the bottom over the last 2 years, and the pricing has been, has never been lower. We've seen 2 or 3 insurers just say enough's enough, and they've basically starting to place some pretty hefty increases on their liability book. So motor insurance is all about the claims. You will have a motor claim this year, and when you do, you need to make sure that insurer's got a slick system. So it's prudent to ask where that insurance claim is going to be settled, who is the person who's going to be settling my claim, because how that rolls is going to be crucial for you and your business. So we've also got some new risks. As you're looking to purchase a business or exit a business and looking at your next opportunity, we've got an ever-increasing cyber liability exposure. Someone explained cyber liability to me that every business has a front door up in the sky, and these hackers just simply go up to every door and they just push the door, and they can push enough doors that eventually the door will open. And when they open the door, they're into your business, and you may not even know about it. So they can shadow your business for a long period of time, waiting for details to arise, and then they jump on board. And so large financial transactions could be going to the wrong bank accounts because they've been shadowing you for a long time. And the Wellington property market, well, I put this up, and when I had my colleague peer review it, he said, "Oh, I've put the wrong one up." I said, "Well, look at the year." So the hour hand is pointing at 5. So two years ago, the premiums were never lower. I've been in Wellington now for 12 years, and at no time, even having had Christchurch and all of the other Wellington events, the property prices were an absolute low. And that's good, but like any cycle, they have to change. And the Kaikoura event was the key event. Now, nobody died, thankfully, but the insured losses to come out of Kaikoura, any one of us who are driving along the wharf there can see the number of multi-million-dollar buildings that have come down, and it has changed the landscape, literally, but changed insurers' insight into how they want to insure things. So if there is any large property asset, be it machinery or building as part of your sale, you must very seriously consider the quality of the insurance company that you've got, the basis of the cover that you've got, and the information that you'll be providing to the purchaser. So I'm tired of looking at buildings that don't have engineers' reports or plans on restructuring it. So I've got one today where someone's looking to buy an old building and thinks that they can transfer the insurance. Well, that can't happen. So the new insurer needs high quality information before they will accept that risk. And like any cycle, it will go from 5 o'clock to 8 o'clock. I mean, I think we're probably at sort of 9 or 10 o'clock, and it will go back. But I just don't know how quickly, because after Christchurch it rebounded very, very quickly. Now that's me. I haven't really kept a cue on the time. Insurance is one of these things where there's either going to be 25 questions or none. There's no silly questions, and I hope to be able to answer any questions that people may have.
Very good, thank you, James. Do we have any questions? Well, I think your second answer was right there. I had a couple for you myself.
Yes.
James probably remembers I was involved in negotiating a claim, was it a 2.2 million claim in a business interruption insurance, 2014, a flood in a premises in Hutt. And Crombie Lockwood paid that out and worked with us through the process. But it was a huge learning experience for me. We'd always had business interruption insurance, and I've signed it off every year. Down the bottom I had 6 months' wages, had different pieces. But when I actually came to get into that claim, I had no understanding whatsoever of how it was going to work. And the fundamental learning for me is that insurance, your broker, your advisor, is a piece of your business that you likely don't understand that well. It's probably sitting in the filing cabinet somewhere and you renew it every year. But if you do understand it, it will fundamentally change some of the ways you store and view your information. Is that fair enough?
Yep. Yeah, absolutely. And at the end of the day, you're not insurance experts. That's why you have an advisor. But that business interruption piece, the continuity and the resilience, I always say to people, in a world of no insurance, what would you do? And ultimately that can be quite a profound question for some people, because they simply think the insurance will save their lives. Well, one of the things around business interruption is if you have no intention to reinstate, you will get nothing from your insurance company. So that's something that your broker should be talking to you about, and making sure, at least on an annual basis, and probably more likely twice a year, talking to you about your business trends, your desire to fully insure, selectively insure, because it will materially affect your claim.